Hey everybody, welcome to the No Shill Zone. My name is Gareth Soloway, joined by Ben Cowen. How you doing, buddy?
Pretty good. How about you?
Good, very good. So let's get right into it, man. Where should we start? Should we start with Bitcoin's breaking above the 2021 high? What do we have going on here? What are you thinking?
Yeah, so we talked a lot about this over the last few months. It seems like that. I mean, generally, I think we're just getting a big rotation, and people are going into Bitcoin, and like we kind of talked about this idea of a rally kind of into the halving.
Mhm.
I mean, it doesn't mean it has to last until the halving, but that general idea, and I kind of go back to that idea that I've been talking about for a while now, and that is that it stays risk on until dominance breaks out, right? Until all Bitcoin pairs break down. And what's fascinating is, what we've seen happen for a long time, right? We've seen Bitcoin go up, dominance go up, and then we'll see altcoins then try to catch back up, right? They'll try to catch up. But every single time, it seems like alts fall a little bit further and further behind as they slowly bleed on their Bitcoin pairs. So again, I think that when the break out of Bitcoin dominance occurs and the breakdown of alt Bitcoin pairs occur, I think that could finally give us a bit of a breather in the market. But in the short term, hey, I mean, the momentum just keeps on, swinging back to Bitcoin.
Yeah, for sure. I agree, and it definitely is impressive to see these type of moves coming out in the crypto markets. One of the things I've been following closely is like what is Nvidia doing, right? Nvidia to me is kind of the poster child for risk on, and obviously we saw actually a pretty impressive reversal engulfing candle on that on Friday, and so far it hasn't had an impact on what we've seen here. So if we take a look at the chart, so you have a clear engulfing reversal candle on Friday. Today Nvidia was down and it's actually fought to go green. So it's showing us that again, buyers are buying the dip, which maybe just continues to tell us that there is some buyers out there that are still left to get in on these risk assets and chase them a little bit higher. But there's no doubt that Bitcoin is kind of the king of the castle here. ETH, interesting as well. I mean, I definitely love to hear your thoughts on ETH, but it's piercing this 4,000 resistance level, and I'm kind of curious as to your thoughts on that.
Yeah, so my thoughts on Ethereum are essentially the same that they've been for the last 2 years. Like as long as Bitcoin goes up, it can drag ETH with it. But
Mhm.
once again, we saw Bitcoin hit new highs before Ethereum, and that's what typically happens. I think every single cycle, there's a lot of people that think like, well, no, ETH will outperform Bitcoin, but ETH usually only starts to outperform Bitcoin once QE comes back. Uh,
Right.
and like when looser monetary policy, whenever that happens, yeah, I would probably be on board with the idea of ETH outperforming Bitcoin. But at this phase and where we are sort of in the cycle, I think that yes, ETH is. I mean, look, it's broken $4,000, right? It's gone up a lot, but the reality is it still has drastically underperformed Bitcoin, right? And one of the things that we can look at actually is this heat map. I was actually playing around with this heat map stuff, and look, this is the top 200 cryptocurrencies, their Bitcoin valuations over the last year, right? So most of them are in fact red. I counted them up a few days ago, and it was like only about 20% were green. But look at ETH Bitcoin over the last year, right? It's down 21%. BNB Bitcoin is down 47%, right? So a lot of cryptocurrencies are just systematically bleeding back to Bitcoin, and that's really what I'm looking for. I'm looking for the altcoin market to not, to basically get to the point where Bitcoin breaks away and it just
Mhm.
can't keep up, and that historically, at least that's where last cycle we finally had sort of a pullback. So I wouldn't really be surprised if we come into some type of high, before the summertime, and then the market cools a lot, in sort of the summertime, and then we try to figure out, all right, what's going to come, what's going to happen when we get back after the summer, going into the end of the year, the election, and all that stuff. I kind of think that's probably what's going to play out, and probably a very similar thing with Nvidia too. Um,
Yeah.
you
I
know, I
agree. I think you're right on that. I think Nvidia in general, you've had such a massive run. It's normal to have it give some back. The question is, are we coming into a period with lower liquidity, right? I mean, and we've talked about this a lot, is that there's just so much liquidity still in the system. I do know that today is the day when the Fed is shutting off the emergency banking loan program. I
right.
think it's BTF P or whatever it is.
Right.
But again, that should remove a little liquidity. But we still know that the stock market going up is adding more liquidity because people have more money in their accounts that they can rotate to other asset classes. And interestingly enough, one of the things to keep an eye on is as soon as Apple, let me show my screen here, but Apple's a great example of this. So if you look at Apple, it's been in a downtrend, but as soon as Nvidia pulled back on Friday, Apple went up and Apple's up again today. And so to me, when I see this, I'm saying, okay, well, this has nothing necessarily, it's not like a mass sell-off where people are afraid to be involved in risk assets. It's more of a rotation of capital. And I think maybe that's even happening. I mean, heck, you can look at the inflows and outflows from the GLD and you can actually see that there's been outflows until the recent breakout that have gone out of the GLD and probably into the spot ETF for Bitcoin.
Yeah, I think like it kind of makes sense when you think about like, when lower rates actually happen, like, how like a lot of times when lower rates finally arrive, like the market doesn't really do that well for a while. I almost wonder if, because like when lower rates arrive, like there's sort of like a redistribution of wealth, of capital, away from all the things like, the blue chips and into the, to some of the smaller stuff that has been beaten down by so much. I guess the problem is because the market caps of the blue chips are so high, if they drop a little bit, then that can take the whole S&P down, even if some parts of the S&P are going up, right? In the same way that we've seen the S&P go up for a long time, but it's only been dependent on a few stocks, right? I almost wonder if you could see something like that happen in reverse on the other side of a Fed pivot. I guess that will depend on if they pivot before the labor market breaks down or if they wait too long.
Yeah, and that's one of the thoughts I've had is I've been bullish on the Russell ever since we've kind of seen this crazy market move recently. And again, the idea here is the Russell beginning, which is the smaller stocks that have underperformed. I mean, if you look at the Russell, it's not even close to the all-time highs from 2021. But again, the idea is that if some of that money comes out of some of these high flyers, it rotates. Instead of exiting the market, it rotates into other assets. And that's one of the plays, especially if rates are going to come down. But I think that brings up a good point is, I mean, we're hearing Fed officials talk about maybe just 2 rate cuts. I mean, even economists have now said, hey, maybe no rate cuts. I mean, what are you thinking in that regard about like Fed? I mean, are we going to get an actual Fed cut this year? What are the stats saying at least?
I mean, the markets right now are saying we're going to get a cut probably by June, but look, these probabilities change all the time. And I mean, at the end of the day, they're probably not that useful because, even when we were back at like 2% for the Fed funds rate, and it seemed like to me, and I think a lot of other people, it seemed like they needed to go much higher. And I thought 5.5% would be the terminal rate, but it took the market a long time to sort of be on board with that idea. And so I do think the market is constantly trying to figure out what's going on. The reason why I do think there will be, I know there is a camp that I honestly think has a good case as to why why they might not cut this year. But I think there are some strong counterpoints suggesting that we will probably get a cut this year. And I am in the camp that there will likely be a cut this year. If you look at, I was just gonna say, if you look at the household survey, it's really starting to sort of it seems like it might be plateauing here to the employment level. And just looking at some of the things like that, it seems like the Fed's probably going to at least cut a couple times.
And so I guess what you're saying, and this was kind of that follow-up question I had for you is are you saying that they're going to cut because they just think we're too restrictive, but the economy is not going to be weakening, or you actually think there's going to be a situation where they're like, okay, the economy is clearly weakening enough now where we need to cut a little bit?
I think that if in normal times where inflation wasn't as big of a deal, I think they would have cut long ago, right? I mean, in 2019 they cut do you remember in 2019 when like the unemployment rate was going down and they started to cut?
Yeah.
If this is like the unemployment rate, and if you just overlay U.S. interest rates onto this chart, yeah, like they were cutting back over here in 2019. The unemployment rate was going down.
Yeah.
And now we're seeing the unemployment rate go up. We actually hit 3.9%, and they're still unwilling to cut. So I think that they're scared. I think they're scared to cut too soon because they don't want to repeat the 1970s. And I think they're sort of leaning on waiting too long rather than, cutting too early and then having to end up going to much higher rates. I don't really think they want to go to, 6.5% Fed funds rate or anything like that anytime soon. So it'd be easier just to stay higher for longer. I do think that, the economy, look, real GDP is still positive. I mean, real GDP is not really the best predictor of where the stock market's going to go. But I think the labor market, there certainly has been some softening up there over the last few months. We've seen, hires continue to go down, quits continue. I mean, hire is just in a downtrend, quits is still in a downtrend, and all this stuff, you would assume has to eventually reverse course, but I don't really think it's going to reverse course until they pivot. So my guess is that they're just going to be forced to pivot sometime this year so that this trend starts to look a little bit better.
Yeah, that's what I was kind of contingent on too, is that I do think we'll see some weakening enough for them to justify, but it's hard to believe that we're just going to fall off a cliff when we've seen, the labor market. I mean, I do think once the labor market starts weakening, it'll weaken quickly, but again, it's one of those things where it's hard to imagine the economy really falling off a cliff, but I think they want to anticipate it as much as possible. While also balancing inflation risk, right? And I think that's the key as well. Like you mentioned, they're very scared of that inflation. That's probably why they haven't cut yet.
Well, that's the thing about the unemployment rate, though, is that like when it starts to move, it can move really quickly. I mean, the reason why these are circled is because it's essentially like basically where we crossed above the 24-month moving average for the unemployment rate, and every single time it's been a slow grind to get back up to that 24-month moving average. But then once you get back to it, I mean, you can see just how quickly the unemployment rate can go up. And I think the reason is because it all hits at once, right? At some point in the future, unemployment rate's going to hit 4%, probably, right? And then we're going to look around and we're going to be like, oh crap, like it's heading up. And oh, wait a second, there's no job openings. Like job openings have been completely removed, right? And no one's quitting, and there's no one hiring, and that's where the sort of the old crap moment can come from, when people are like, wait a second, what if it is actually weakening, and they just simply wait too long. But again, like who knows how long that'll take.
In 2018, I still remember vividly, it was like mid-November 2018, and all of a sudden the stock market dropped, I think about 20% in 6 weeks, and they literally were in a tightening phase, and they reversed quickly and started cutting, right? Do you think anything like that can happen? I mean, do you think do you think that the stock market can play an influential role, or at this point they are like, listen, the markets are up so much, if it fell 20%, that would be healthy?
I think if the market fell 20%, that would cut, is my guess. Yeah. But I also think that there does exist a scenario where the first cut is more than 25 basis points as well. And I think that's something, because again, like when you look at sort of like these sorts of charts, I think it's sort of like a bimodal distribution, right? You have some people that are basically betting on no cuts at all and higher for longer, right? That's why there's probabilities of us just staying at 5.5% for the rest of the year, basically. And then you also have some people, betting on several hundred basis points of rate cuts. So I mean, it could end up being something in between, and we're just sort of seeing the mixture of sort of the soft landing outcome versus the hard landing outcome. I'm curious though, like, what are your views on the S&P from technical standpoint? Because I know when we came into this year, again, you were saying 5,000, and then I think you mentioned 51, 52. Like, I don't know. I mean, the S&P is it's at 5,200 now, or it's around those levels.
Yeah. So today, this is actually really interesting, because I think you saw a few things that make me, at least for the stock market, and obviously right now crypto appears to be very, very strong, with Bitcoin continuing to be at the highs. But one of the things that got my attention is you have this wedge pattern, which has been just, it by the way, so rare for a wedge pattern for price to stay within this range for this long. One of the things I'm keeping an eye on is today could be the first day we close below this lower part of the wedge pattern. And if you look back, when we closed on it a couple times, but never below it. And so again, we'll have to see where they close the S&P today. Maybe they rally us back up again and get us back on or in this line. But as of now, that's a concern to me, because when the longer you stay in a wedge pattern, when it finally breaks one way or the other, it's usually a very significant move. And so again, right now they are rallying the S&P up. We can see again a little bit of a bounce on the 10-minute chart off the lows. We're coming back in. But if we do break this, to me, that's a big break. And This is one of the things that I've been waiting on substantially. And then, we talk about some of the main drivers of the bull market here on the S&P or the Nasdaq. It was Nvidia. There's no doubt about it. And this reversal engulfing candle, and again, reversal engulfing candles, for what people don't know, you have to start above the previous high of the candle and you have to close below. So essentially, it reverses the move and it engulfs the entire previous candle. Those are some of the most bearish candle formations that you can have in the market or in any chart. And so again, there are signs. I mean, another chart that has been cataclysmically bullish is GE, General Electric. This is a topping tail. Topping tails, again, it shows distribution from big money finally starting to pound it down. And that's why it was trading up here. You can see it traded as high as 176 on Friday and closed at basically down $10 on the day, creating that long reversal tail. So for me, it's we're on the verge of something. It looks like it's to the downside, but I really want to see where we close today. But if that does happen, then I think that this market, at least the stock market, and again, hard to speak to crypto because maybe we'll see a rotation out of some of these risk assets in stock market and into crypto. But I do worry that if the stock market accelerates its downward motion, then eventually it catches crypto on that risk off. And again, something just to keep an eye on here.
Yeah, I think with the S&P, it's hard because there's always something to worry about, but as always, right, it loves climbing the wall of worry until it has a good reason not to do so. And I mean, there's always some things I think that are worth considering. But I go back to the main two things that I think about, and that's basically like until either inflation goes back up or the labor market. And I mean, I think we're close in the labor market. I think the threshold is at 4%. I think 4% is when the market will care.
Yeah.
But again, like it's hard to know, like when will that occur? We hit 3.9 a few months ago, and then we just went right back down to 3.7, for a few more months, and the market then just continued to rally. So I think that once we hit 4%, I'm guessing that will be sort of a signal to the market that it needs to cool down. And that's sort of in line with this idea of some type of resolution to the mania phase before the summertime. And then during the summertime, I think the market is going to be really digesting whether we're going to get a soft landing or if it will be a hard landing. And I don't know. I mean, I really don't know the answer to that question. I do. I mean, if I look at history, I know that, there's definitely examples of both, but it's sort of a fine line to walk, especially considering that gold. I mean, gold is something that we've talked about for a while. I'd like to hear your thoughts on that because we've seen gold slowly build back up to the highs, right? And again, a lot of investors in crypto don't give anything. I mean, they don't care at all about gold because even if gold were to go to 3,000, even if it were to go to 3,000, they don't care about that, right? I mean, if crypto gives us overseas gains, but I think that gold can sometimes operate as a signal, right, more than anything else. And there are times in the past where after gold breaks out, everything rallies together for a little bit, right? We saw that in 2019, even we saw it in 2008 after gold broke out. Everything sort of it's not like it has to immediately drop. But what are your thoughts on gold? Because we not only did we break out of that 2070 threshold, but now we're just putting in new highs.
Yeah, and it's amazing. And, you very rarely see such a dramatic move in gold with so many green candles in a row. So it's been a big breakout. We know it's been kind of long-term coming. And when I say that, what I mean is, one of the things we've talked about on this show before is that, for me, one of the signals that was for me to get long gold over the last 3, 6, 9 months is I just continue to look at the stats of the central banks around the world just buying it hand over fist. Speaking of which, I just saw over the weekend that, China just bought in the last quarter, or I think it might have been just in January, 12 more tons of gold. And so again, that's massive. They've been buying so much gold out there. And you got to wonder what the reasoning behind that is. Is it because they want to get away from the dollar as a reserve currency? Is it because they want to shore up their printing presses where, they're printing lots of money, but if they continue to buy gold, per gold, they're keeping value there. There's a lot of different things, but ultimately when the big players like a country or a central bank are buying gold, it does get my attention. And you're right, compared to Bitcoin gains, I mean, gold is never, I don't think it's going to have those type of gains behind it, but it also doesn't have the drawdowns, right? And so it's for those people that have a significant fortune. You don't really want to invest a ton in something that can have drawdowns of 70 to 80% in bear markets. Trust me, that doesn't feel good when you have, $25 million invested in Bitcoin and that's the drawdown you get. So I think that's where gold comes in. I think it kind of becomes that offsetting kind of physical metal that central banks want to play. But for me, it's a matter of, to me, it's going higher. It's going to continue to go higher. Yeah, you'll have pullbacks, just like Bitcoin long term. I still think is going to go higher. I just expect bigger pullbacks on Bitcoin, which allow me as a swing trader to capitalize on along with the altcoins. But yeah, I mean, I think the last thing you made is a great point here is that, does gold's breakout at this point in the cycle where the S&P is kind of at all-time highs, the NASDAQ 100 is at all-time highs, is it also signaling that additional money is starting to flow into gold as a safety play for potentially something that's coming later this year? And I think that's the bigger question is do we see gold continue to outperform if we see a recession?
Right. And if that does happen, what normally happens is that gold actually gets a big pullback, like when
Right.
that happens, but then it's usually a lot quicker to recover than risk assets. Uh,
Right.
because then the risk assets really have to wait for much looser monetary policy and QE to really start to do well. And so gold will take that hit, but then it will just continue.
Is there a scenario where you see much looser monetary policy, but stocks still dropping sharply? Like, I mean, is that's a possibility?
I mean, like if you look at the business cycle, like in its entirety, like rate cuts can sometimes be bullish for stocks and it sometimes can be bearish for stocks. I mean, it really just comes down to whether the Fed has gone too far. And I feel like I'm forced to believe that because they're relying so much on lagging inflation data, right? I mean, a lot of it is just being propped up by the housing market, CPI. Um, there's reason for me to think that they might go too far, right?
Yeah.
And it could lead to to risk assets taking a hit. I mean, again, like over the long haul, if your time horizon is say 10 years, it doesn't matter, right? I mean, you can always just have a DCA strategy. You're probably going to work out fine in the long run. I mean, that's kind of what the history of the stock market shows, right? It's just that if the Fed does pivot, so my sort of thought is like my base case is that they cut some this year and just to see if they can turn the labor market around, right? And make it so that all these things don't continue trending in the wrong direction. And then later this year, early next year, we figure out if they did enough or if they are so far behind the curve that then the market's just basically throw in the towel and say, well, we thought the Fed was going to come to our rescue, but inflation has kept them from doing what they normally would do. And therefore, we're going to tell the Fed they made a mistake and they need to reverse course very quickly.
Yeah. Yeah, and I think one of the things that kind of piqued my interest over the weekend, China CPI came out, and I don't know how many people know this, but China had been in a deflationary mode for quite a substantial time, and we did see CPI begin to uptick. Now, some people are saying, "Oh, it was the new year and it was all the spending of the new year," but the question is, if it's not, and it's starting to be a new trend, because we know China has printed and basically loosened monetary policy to stimulate their economy. I guess one of the questions I have is, does an uptick in China inflation potentially mean that inflation globally can uptick? Because again, if the China economy does better, then they start competing for goods. And if they compete, like let's say the Chinese consumer starts buying again, all of a sudden goods potentially price wise can go up. And again, that's just one more risk that I think the market is generally not pricing in, is that what if inflation all of a sudden, let's say even before the Fed cuts, let's just say we go back to 4% inflation. And right now we're around three and low threes, but it's not that big of a thing to just uptick to 4%. And then what does that do? I mean, like, how does the Fed react? How do they even cut? Like, I mean, if inflation is 4%, do they really cut rates? I mean, because doesn't that insinuate then we have, inflation skyrocketing again?
That's the $1 million question, right? That could be sort of like the checkmate moment for the Fed of like, you have unemployment at 4%, but how do you aggressively cut if you also have inflation at 4%?
Yeah.
And that I think is kind of what so far the Fed has had a really easy job in terms of like you have to raise rates and you have to hold them there if the unemployment rate's at 3.5%, right? And inflation is high. Those risks are coming into better balance, right? It's not as clear. It's not as clear if they should be focused more on one over the other.
Yeah.
I think I think that, yeah, they probably will end up cutting this year as the labor market shows weakness. I just don't know if they're going to cut enough. That's kind of what it comes down to. I don't know if they're actually going to end up cutting enough to really offset fears. So I mean, look, a lot of times the S&P kind of cools off in the summer. I think last summer it was actually quite hot, right, until July.
Yeah. Yep.
And then we saw that cool off phase. But yeah, I mean, as far as sort of circling back to where we started the video, which is what a lot of people are here for anyways, is Bitcoin.
Yeah.
Yeah, I think that like for me, like I feel like I really do struggle with coming up with like price targets for Bitcoin. Because I know that when Bitcoin gets in these like manic parabolic mania phases, like it's just impossible to predict, ultimately where it's going to go. And so that's why I sort of just revert back to risk on until 56% dominance, whatever price that corresponds to, right?
Yep.
From a technical standpoint, are there any targets that you're looking at for Bitcoin if the momentum continue? I mean, we're now at 72.5.
Yeah, it is pretty incredible here. And I mean, I've been kind of looking at that and saying, all right, well, where could we go? Right. I mean, what's the next leg up? And there's a couple ways to do that, right? So you could do what I would call, a measured move here, or even to this high pivot, and then from the low. So essentially the beginning of the run, we could even drop it down here to get the full extent from the low of the last cycle to the high. And then if we take that and map it out, right? So if we say, all right, so that was a $65,000 move. If we take it from here and we map up that same measured move, and I got to drop my chart down here, we then get to an approximate target of, somewhere in the low 80s, 80,000, give or take. So, I mean, and again, these are just total guesses. Like if just let's say the momentum continues for the next, let's say 5 weeks or a month, it wouldn't shock me to see the measured move. And that would be, again, a completion of a measured move of this bull run to equating to this bull run, getting you to that point. Now, I'm seeing targets out there of 100,000 by the end of the month. I'm seeing, end of year, 250 to 500,000 targets. Again, we saw that in 2021 too, and we know how that played out. I think to me, more than anything, when I see the lunacy of some of the targets. Now listen, by end of year is 100,000 possible? Yes. I would generally say very unlikely for 250 or 500, considering where market cap would be in relation to gold at that point. But I would just say if we just continue to see the bull run, I mean, you're looking at 80, 81,000 as a potential. I do have a little bit of a level at 75 as well. I mean, do you have any guesses? I mean, listen, and everyone watching, listen, it's total guesses. We know that, and hopefully they do too, although I'm sure they'll hold our feet to the fire no matter what we say.
Yeah, I mean, if I'm curious, if you connect the peaks, like where does that end up?
So that's a yep. So you're saying this peak here to this peak? Yeah. So that's another way to do it. And that would be absolute resistance. And again, depends on when we hit that line, right? So if if it's over here, it's at 86,000. If it's over here, you're at 89,000. But suffice it to say, it's in that 80 to 90,000 range. So you have two levels to watch for, one that 80, 81, and then maybe basically 80 to 90, I would say, would be a significant area of resistance on the charts.
Yeah, I'd say like what I'm looking for is to sort of outline it for people for the whole Bitcoin dominant stuff in a more tangible way. Like these are all Bitcoin pairs. And this is sort of the threshold that we saw happen last cycle is Bitcoin USD during QT and high rates found a local top when alt Bitcoin pairs finally broke down in June of 2019, 1 month before the first rate cut. And again, Bitcoin didn't put in a new low after that, but it did have, a sizable pullback. And so I kind of think that, we're sort of doing something similar, right? We're QT, we're high interest rates, and all Bitcoin pairs are now at 44%. And I think that when we get that weekly close below 40%, so at 0.39 or below, that I think whatever price that corresponds to is, I think the sort of the larger pullback that actually happens. And it's so hard because like 6 months ago, if you had told me like, it still wouldn't have broken down. Like I would have thought it would have broken down at that point. But the funny thing is, I don't know why, because if you look at say how long we held these lows, it was about for 41 weeks before it broke down. And, we're now at around like 37 weeks, right? Which is funny because in 4 more weeks, that's just before the halving. And I've said before, right? Like it seems like that the money from altcoins is being rotated slowly back into Bitcoin as Bitcoin dominance goes higher. So that's my view, is that like it's going to be whatever price it needs to be so that alts break down against Bitcoin, and also so that ETH breaks down against Bitcoin. I mean, ETH has been slowly, I mean, this previous support, this ETH Bitcoin, right? This previous support line has now turned into some form of resistance, it seems to me. And so I still think that it's likely going to fall back in. And once it goes below sort of that low from back in the summer of 2022, that I think is kind of where the turning point comes. But again, like it's so hard to know what price that corresponds to. I mean, I could at least pull up the risk chart and show like where the current risk is on Bitcoin. And I mean, the current risk according to the risk metric is 0.741, right? And if you isolate just the 0.7 to 0.7 to 1 risk levels, it shows you that we're in this like manic parabolic rally. Sometimes they last for a few more days, and then sometimes they last for a few more weeks, but in all prior cases, like 6-12 months later, the market had significantly cooled off.
Interesting. Well, I think that's a good way to end it, man. I think we'll call it a day here, but it'd be interesting to see. I mean, amazing to think once every week when we do this show where things can be in terms of Bitcoin. We could be at 80,000 by next week for all we know, or back to 50. We'll have to see. But guys, follow Ben, follow his socials. They're right below here on the stream. And again, he's awesome, as you guys see. And again, it's all about being level-headed. And it's not that we're going to be right. In fact, we're plenty times wrong, but it's about just not getting caught up in the FOMO or the FUD, right? And the both sides of that angle, as there's always things to look to invest in, and there's always things to look to be careful in.
And there's one more thing I want to say, because there's sort of two sides of the cryptoverse, right? Like there's sort of like the more serious plays, like your Bitcoin and your Ethereum. And regardless of what happens with those on the other side of rate cuts, there's a good chance they will eventually do well again, right? I mean, they'll go back into what you really have to be careful with. And this is called the No Shill Zone for a reason. Like, we're not here to shill you, like these scam coins that are like, number 20,000 by market cap that were created last week, and then you just get rugged on them. So there's a lot of that going on right now in the space. I do see it a lot. And so I just think people really need to try to like tune that part of the market out. Like, yes, you can make money in it, but you can also lose a lot of money in it too.
Yeah.
And I do think it's important to recognize that it is a Bitcoin rally where dominance of Bitcoin is going up, right? Which means the highest, like the lowest risk asset is generally seeing amongst the highest returns. And you have to be careful with all these, with all these microcaps. So anyways, guys, if you like this content, again, go subscribe to Gareth as well. We will be here next week. His socials are in the description below as well. And we will see you guys next Monday.
Awesome. Thanks so much, guys. Take care.